one new gold stock making big headlines since its start last April, acquiring gold for $5 to $10 per ounce in the ground, which is dramatically lower than the $50 to $100 per ounce in the ground other companies have been paying. To learn more about what hard asset investors are calling a mineral bank, visit crushthestreet.com/investright.
Hello everyone, and welcome into crushthestreet.com. We got a special treat for everyone today. We have what I'm calling the Bitcoin Dream Team here. It's going to be a four-way conversation. I have three guests on the line, and we're going to be discussing Bitcoin and the greatly anticipated Block Reward Halving now in a matter of days. And this is a big deal, especially for Bitcoin. And as Bitcoin has just become more and more of a viable alternative to the fiat currency system. So I want to get into the guests we're having today. First on the line is Trace Mayer. He hosts the popular Bitcoin Knowledge podcast and has funded core blockchain infrastructure, and his website is bitcoin.kn. And also on the line is Max Wright. He's a philosopher, blockchain thought leader, author, investor, and successful internet entrepreneur. His website is successcouncil.com. And we also have Dave Scotese. He's an expert on Bitcoin and liberty, and his website is litmocracy.blogspot.com. And he's a major influencer in getting people using and trading Bitcoins as a dealer himself now for 3 years. So we'll say hello one at a time here. Trace, thanks for coming on the line with me.
Oh, thanks so much for having us and putting this together, especially at this kind of momentous occasion in Bitcoin history with the Block Reward Halving.
Absolutely. Looking forward to a great discussion. Max, big news here. Thanks for coming on the line.
Thanks for having me too, man. This is going to be great, and looking forward to it.
Yeah. And Dave Scotese, thanks to you as well for coming on and sharing your knowledge.
Thanks for having me, Ken. I'm looking forward to a good discussion.
Well, let's start off with Trace here. Trace, kick us off and give us your thoughts on this greatly anticipated Block Reward Halving, and we'll go down the line from there.
Yeah, so what happens with the Block Reward Halving is that according to the rules of Bitcoin, which is a distributed, decentralized network, it's like an internet protocol, is about every 4 years, it's actually every 210,000 blocks, you get a block every 10 minutes, and these blocks have a reward, and the reward goes to whoever solves the problem for the block, to one of the Bitcoin miners. And so every 210,000 blocks, about every 4 years, actually this one's coming a little faster because there's been lots of hash power that's been added to the network to make it more secure, but it declines. And so when Bitcoin was first introduced, it was 50 Bitcoins every 10 minutes. Then we had the first block reward, and at the time, the price of Bitcoin was about $7, and then the block reward happened, the halving. It went to 25 Bitcoins every 10 minutes, and then the market had to adjust in terms of price. And over about a 2 to 3 month period, it went up to about $266 and then corrected back down significantly. But, now we're going to have the second halving. And so the first halving happened without a hitch. Nothing, the network wasn't negative in any way. We didn't lose any large amounts of hash power. Like, everything just continued functioning completely normally. It's just the supply of new Bitcoin dried up, no matter what the price was. The price went up $7 to $266. So we're in for another interesting economic experiment with this new happening, and I think it's just going to be fun to see it happen, especially if people are holding Bitcoin, because once the speculative demand kind of picks up on this lack of supply, that's where things get exciting, in my opinion. Did you want to add anything to that, Max?
Yeah, I totally agree with you. It's as if, to me, with that halving of supply, it's as significant as if like some major disaster happened in the world. It's like a big hurricane or whatever, and we said half of the world's wheat supply we just got lost this season. What would that do to the price of wheat? But not only that, it's like, well, half of the world's wheat supply has got lost forever and will never ever come back. And what's that going to do to the price? So now the only difference is with a tragedy like a hurricane or something is we didn't know it was coming, so it can't be priced in. So we know it's going to have a dramatic effect, but the question is how much of that effect was already priced in beforehand? And I mean, that's the big question for everyone to answer, I guess.
Well, this is Dave. I see another difference between the Bitcoin and the wheat because the supply of wheat is constantly being used up, but the supply of Bitcoin doesn't get used up except by people who lose their keys and lose their Bitcoin. And another difference I was imagining is the reward is getting cut in half in Bitcoins, but in terms of purchasing power, it doesn't have much effect because of what because the price increases like 7 to 266, like Trace said. If we look at 266 as the normal price for Bitcoins when they're being produced at 25 coins every 10 minutes, then when that drops to 12 and a half, we would expect it to be 520 or 540. So we're a little above that. But then we have to factor in the growing popularity of Bitcoin, and that would explain why it's up in the 600s.
Yeah, and I suppose another point to add to this is when you wipe out the wheat supply, for example, well, it's very easy to shift production of some other commodity like soybeans or corn to produce wheat instead. But with Bitcoin, no matter what the price does, you cannot bring more supply of Bitcoin to the market. You can't just like open up another gold mine or open up another silver mine or shift soybean production to wheat production. So that's another thing that's very interesting. And as we'll talk about later, I don't think it's even possible for the market to price in the halvening event because of the price elasticity of the transactional demand portion of Bitcoin. So it's a very interesting experiment that we're gonna see unfold again for the second time.
And what I would ask as someone who's not an expert on Bitcoin is, what we're seeing now is the viability of Bitcoin increase to a larger level. More people are using it, and I think for skeptics out there, everyone was worried that people would just automatically one day say we're done with Bitcoin. It was a fad, and it would go to zero. And we're not seeing that. The viability is continuing to increase. So, let's move on to Max here. Max, let's get your thoughts on what is going on with the future of Bitcoin. And, for all the naysayers out there, they're starting, a lot more people are starting to buy into it. Would you agree?
I totally would agree, and that's kind of evidenced by the increased number of transactions that we see on the blockchain. And so, but something that was a big driver in driving Bitcoin early on was the huge volatility. There was some people complained about it, sure, but many people came in as speculators because they saw this, huge price swings, usually to the upside, and that brought in a lot of eyeballs. And it's been a little bit quiet the last couple of years. Having said that, in the last kind of 3 months, the price has gone up 50%. But I think because of the halvening, you're going to see new all-time highs by the end of the year. At least that's my prediction. And I think that is going to be, and then that's going to bring in all the speculators. That's going to drive another bubble. There's going to be another pop. There's going to be all this press associated to that. And when that pops and does come back, I think it will still settle at a new high. And that's going to be a whole bunch of more people with more money, with more wealth held in Bitcoin that they can then use to reinvest in infrastructure and lots of other things. So that whole cycle that was really important to Bitcoin early on, it's been a bit quiet for the last 24 months. I really see that whole cycle starting up again sort of later this year or early next year, which I think is going to be very exciting for the future of Bitcoin.
Dave, is there anything you wanted to add to that? If not, I wanted to get to one of these questions here, and that is, cryptography. The one of the reasons people are using Bitcoin, the anonymity of it, and its uses in today's environment. I like to try to start segueing into some of these questions that we've received. What are your thoughts on that?
I don't have anything to add to what Max said. So yeah, let's move on to the anonymity of Bitcoin is useful in terms of external third parties. In terms of, since I've been dealing Bitcoin for a while, I've come to the conclusion if you're going to trade with somebody, you need to get to know them just to protect yourself, and they should get to know you to protect themselves. And the danger in that is that if you're dealing with somebody who wants to hurt other people or government, same thing in my view, then you need to figure that out on your own and protect yourself from that. So get to know each other and hide your transactions from snooping people. That's what I think Bitcoin is great for.
Well, and two, I would ask, is there ways for government to track Bitcoin? And I know this is one of the appeals to it, being able to transfer money around the world. But for someone who might not be very familiar with Bitcoin, are there potential surveillance risks or potential in being watched, or are we pretty much free from government controls in terms of transacting with Bitcoin? Maybe we'll go back to you, Trace.
Yeah, I suppose I'm a pretty good one to ask about that because of my investment in BitPay, which is the largest merchant processor, and also Kraken, which is the largest fiat Bitcoin exchange in the world, or second largest behind Bitfinex. We kind of neck and neck every now and then. The former chief compliance officer of Visa, we hired him at BitPay. So we believe in trying to be compliant with relevant laws and regulations. We process for some of the largest companies like Microsoft. Kraken does tens of millions of dollars of liquidity every day. It's a real pillar for the Bitcoin ecosystem. And at the end of the day, yeah, there is a lot of surveillance that does happen, can happen. Bitcoin provides its own unique challenges in order to be compliant with different rules or regulations, like the travel rule, for example. And I think that what we're seeing is that those criminal elements that want to use Bitcoin for the dark web purposes or whatever, they're actually moving to other currencies. They're moving to Litecoin, to other stuff. And so what they'll do is buyers will come in, they'll come in via Bitcoin, they'll trade their Bitcoins into Litecoins or Namecoins or something else. Then they'll use those on the dark web. Then the person who receives them will use them through another mixer or tumbling type service or exchange service, like btc-e.com or something. They'll use it to exchange back into Bitcoin, and then that cuts a lot of the audit trail. And so Bitcoin is definitely, I think, being used as a nexus in a lot of ways, but it's also for those criminal elements that are using it that are sophisticated. It's making it very, very difficult for people to surveil them because it is so flexible and so fluid. And as soon as, we haven't really talked about the underlying technical pinnings of the system, but we recently had check lock time verify, which is a script in the Bitcoin language. It went into effect. We've had check sequence verify. We've had several other BIPs that went live. All of this laying the foundation for something called segregated witness. And segregated witness will lay the foundation for something called the Lightning Network. And the Lightning Network, in conjunction with things like CoinJoin and confidential transactions, all being made possible with stuff like segregated witness. Bitcoin, it's going to be on like Donkey Kong for these regulators. They're going to have a really, really tough time surveilling stuff. And so the solutions to these problems are very much on the horizon because, we get a lot of the legitimate large actors are like, look, we can't use Bitcoin. Everything is on the public ledger. And that reveals trade secrets. In some cases, it violates HIPAA compliance, the Healthcare Information Protection Act. Like there are a lot of problems with Bitcoin in terms of the openness of it. And so those solutions are coming, and those solutions will affect both the legitimate, legal, compliant companies, but it's also going to provide cover or shadow for some of the more nefarious uses too. And, that's just, it is what it is. Gravity is no respecter of persons. And so likewise with Bitcoin, hopefully.
Max, your thoughts on this and just kind of Bitcoin's threat or people's concern with it. I mean, I would mention something to Bitcoin Bitcoin to someone, and they're someone who's a skeptic, they'll just tell me, you know what, the government can shut that down if they want. The government can trace that if they want. And from what I gather from you guys, the research I've done, that's not the case. Well, what are your thoughts on that? And kind of, as a response to Trace as well.
Yeah, so I think just something, in case we have some new listeners on here, I think it's important for them to know you don't just get to start using Bitcoin and by default it's going to be anonymous and no one can ever track you. And it actually, in order to go to those levels, it does take a fair amount of skill. So I just want to warn people that generally, if you just learn Bitcoin in your first few transactions and you do things the normal basic way that we probably all did the first time, and you buy at an exchange or whatever else, just so you know, people listening, that's probably not going to be anonymous, and there is an audit trail, and it can probably be traced back to you. But with some extra steps, and once you become a sophisticated user, and usually at a small cost, you can make them anonymous. So I just wanted to point that out. I lost the thread. What was the other question?
Well, just responding to Trace, and if the government can actually come in and just shut down Bitcoin if they wanted to, because you'll hear that from people. I hear it from people say, if they really wanted to take it out, they can. What would you tell someone who tells you that?
Well, I mean, I think it's important to know that the Bitcoin is a protocol. And it can exist in people's minds if it needs to. It doesn't even need the internet. I've had some fun conversations with people about if they said, just for a fun experiment, if they were ever in jail or anything, they'd start a cryptocurrency with pen and paper among the inmates just to keep it interesting. So here's what the government, once you strip away all the whatever, you're left with the facts that government aren't men with guns, and guns can only be pointed at people and scare people. They can't be pointed at math. And at the end of the day, cryptocurrency is math. And as long as you can hold a number in your head or remember something, then you can be involved in the Bitcoin network. So it is true they can make it difficult. They can attack exchanges and the entrepreneurs who seek to build up businesses around Bitcoin. They can do things where they make it difficult, but they can't ever kill Bitcoin, in my opinion.
Right. Ideas are immortal.
Exactly.
Dave,
I was going to say something about the anonymity of Bitcoin. If you have a network of people that you trade Bitcoin with, you have plausible deniability. People ask me to send Bitcoin somewhere, and I'm like, okay, I'll send it. You send me cash, I'll send Bitcoin there. They could prove, okay, you had these Bitcoins and you sent them to this bad guy, and so you must be doing something wrong. And I say, well, I send them to whatever address my customers ask me to. That doesn't mean that is that customer the bad guy? No. So, as long as you know who you're trading with, you're protected. That's how I view it.
Trace, one of the last I remember one of the things that we talked about in our last conversation was if just a small fraction of the value that is like in alternative investments globally goes into Bitcoin, the Bitcoin price could just skyrocket. And I'll set you up with this. How does Bitcoin threaten the current financial system?
I think the biggest threat is that it's an equity-based instrument like gold. It's nobody's liability. There's no counterparty risk if you're holding it directly. You're able to transfer value over a communications channel without going through a centralized third party. That means that you don't have to use their fiat paper franchises anymore. You don't have to use a Yellen coin or a Draghi coin. And also, Bitcoin's market cap is now about $12 billion. Deutsche Bank's market cap is about $18 billion, to put it in perspective. And when Deutsche Bank goes down because of what they've been doing in terms of their gold swaps and the gold leases and the counterparty risk and the amount of bad debt that they have and the negative interest rates, I mean, we now have $11.7 trillion of government bonds that have negative interest rates. Bill Gross said that this is going to be a financial supernova. Alan Greenspan, the former head of the Federal Reserve, is saying that hyperinflation could very much be on the horizon. I mean, we're talking about the complete disintegration of the current worldwide monetary and financial system and currency system. And Bitcoin is standing there as a potential solution. You can transfer money anywhere in the world with it. because we've reduced the money, as Max has said, to math, to a number itself, to a prime number that you use to secure your Bitcoins with. It's really a fantastic innovation. And it's just, it's right now it's still an experiment, but it is a release valve for the current system. And the amount of capital in the current system and the liquidity pyramid, I mean, we're talking hundreds of trillions of dollars that is going to need to find a safe haven. It's going to need to find artwork, it's going to need to find diamonds, it's going to need to find real estate, gold, silver. Some of it's going to find Bitcoin, and if just a small fraction of a percent of it finds Bitcoin, it could be millions of dollars per Bitcoin. So, I mean, it's really, really crazy when you look at the asymmetric potential returns of Bitcoin. You have very little to lose, and you can only lose what you put into it since it's equity based, as long as you're not margining or anything, and you don't have to have any counterparty risk if you take possession of the Bitcoins yourself. So you buy them on an exchange like Kraken, you withdraw them to your wallet. Your assets are held directly by you. There's no hypothecation, there's no rehypothecation that's happening with it. There's no failure to delivers like, with naked short selling of stocks. I mean, it solves so many problems by just eliminating all the middlemen and all the layers of risk between you and your assets. And I think some people with capital might find that attractive.
Max, you said by the end of the year, you wouldn't be surprised to see all-time highs. Trace is saying not by the end of the year, but I mean, with just a small move from alternative assets, we could see, one Bitcoin worth millions of dollars, $1 million here. What is your thoughts on Bitcoin as a threat to the current financial system? And, feel free to respond to what Trace said.
Well, I agree with Trace in that if there is a black swan event in the global financial systems, then I agree. It's entirely possible that you'll see Bitcoins in the hundreds of thousands of dollars, maybe even millions of dollars per Bitcoin. And so then you have to ask yourself that question, what is the potential of a black swan event in the global markets? And Trace sent out a couple of little bits and pieces there. You got Alan Greenspan mentioning hyperinflation, Deutsche Bank looking very, very shaky. There's no question the system is incredibly shaky. From the crisis in 2008, they've basically used up all their ammunition in quantitative easing and many other things to try and shore up the system. And we see that they managed to keep the system alive, but they didn't really cure the disease that it had. And all of the problems that existed back then still exist today, but worse. And so the next time there is a sneeze or a cough in the monetary system, will they be able to save the patient, or will the patient die? And that's a question that everyone has to answer. And if you answer that patient might die, then you would be wise to put at least a portion of your wealth into something that does not have counterparty risk, like Bitcoin, like gold, like silver, like diamonds, like the things that Trace mentioned earlier.
Well, and if I can flesh out a little bit of this outline that we've given here, I'm a consultant for GATA, the Gold Antitrust Action Committee, GATA.org. It's a 501c3 about civil liberties and monetary instruments. Anyways, they've done tremendous investigative journalist work to uncover this gold price suppression scheme that is official policy of Western central banks. I mean, even in 1999 and into the mid-2000s, the forensic accounting of central bank balance sheets, they carried gold out on loan and gold in the vault as the same line item. And in fact, they're reporting cash and accounts receivable as the same thing. What they've done is they've leased the gold or otherwise encumbered it to the bullion banks, who have then sold the gold into the physical market. And you'll notice gold is, hitting about $1,400 an ounce right now as people are running to it for safety. And what happened with Lehman and with Bear Stearns, so you had Bear Stearns fail, right? Well, Bear Stearns had a bunch of silver contracts that that basically had to be bailed out. Well, this time around, it's Deutsche Bank. Deutsche Bank has been so involved in the gold price suppression scheme that, and now Deutsche Bank its chart looks just like Lehman's chart. And so when Deutsche Bank fails, and it's going to fail, it's just a matter of time, then you're looking at potentially the complete disintegration of the euro. You're looking at the counterparty risk rippling out because these financial weapons of mass destruction that Warren Buffett calls derivatives on all these bank balance sheets is just going to disintegrate the entire asset side of the ledger, and the liability side we're talking about nominal amounts becoming notional amounts becoming nominal amounts that are owed, counterparty risk failing, everything just coming down from the financial side. Most of the experts that I've been reading are estimating that this time around the financial crisis is going to be about 7 to 12 times larger than it was in 2007. And they're out of ammo with all these negative interest rates. So what are they going to do? They're going to have to monetize the debt. So we're talking about just disintegrating everything. The system, it doesn't collapse, it evaporates as capital moves down the liquidity pyramid into safer, more liquid assets. And guess what? Gold is the main solution, but Bitcoin is increasingly becoming more and more of a solution because, one, the safety and security of it, it's still around, it's never become worthless, and two, it's more portable than gold. You can send it anywhere in the world. You don't have to go through an X-ray detector at the airport with it.
And one of the things that you point out is it's not going to take much value-wise for it to go significantly higher from where it is today. Dave, I want to get some of your thoughts too. How does, and you can respond to Max or Trace as well, but how does Bitcoin currently threaten the existing financial system?
I'm not sure it threatens the system. I think it threatens the people who are using the system to, let's say, counterfeit, because I really like that word. When you think about the problems that counterfeiting causes, it causes everybody problems except the guy that's printing the money. That's the system we have. That counterfeiter is the guy who's threatened by Bitcoin, because people are going to say, oh, I want to get rid of all this fiat currency and buy stuff that's not, whose value is not at the whim of some counterfeiter, central bank or whatever. So there is a threat, but I don't think it's to the financial system. It's to the people running the financial system who have granted themselves a license to, steal from the rest of us. Essentially, is what the 1913 charter for the Federal Reserve is, and most central banks are on that same path. So it threatens them.
Trace, I know you were going to say something, and I did cut you off. I apologize for that. Did you want to finish your thought?
Oh, well, it kind of ties in exactly what Dave's hitting. He's hitting the nail on the head with this point, and it's that legal tender laws require us to settle into these fiat paper franchise currencies, basically. And why do you want those? Pretty soon it's going to be just like the constitutional revolution. Debtors are going to be paying creditors without mercy with worthless little fiat coins. Whether it's a Yellen coin or a Draghi coin. Like, why do you want those? They're not limited in amount. And they're just going to keep adding zeros to them. We've seen this play out with thousands of fiat currencies that are currently in the fiat currency graveyard. It's a very predictable result. It's happened all the time. This is always what happens when there's a bank failure and a run. It's why Isaac Newton developed the gold standard in the first place, when he was master of the mint.
I think an important thing to add in here, to sort of answer your question, which you asked a few times, is Bitcoin a threat to the system? And I think the real answer is the system is the threat to the system. It's broken at its core, it is corrupt at its core, and it can't survive in and of itself. However, Bitcoin, along with gold and silver and maybe other options, are standing in the wings to come in and give people the opportunity to rebuild an economy without it. And so it may be that you might see something like a Bitcoin replace fiat currency eventually, should the system die sufficiently. But don't confuse that for Bitcoin threatening the system. The system is on a kamikaze mission, and it will not survive in and of itself, whether Bitcoin is there or not.
Yeah, that's an important point to keep in mind. Like, we're dealing with a Ponzi scam, and at the end of the day, like, Ponzi scams always fail, and it'll just fail faster when people are able to have a better solution or a better alternative. to use.
That insight that the system is a Ponzi scheme. It's a racket for bilking the masses. That's kind of what drove me into dealing Bitcoin. I keep telling people I kind of like software programming better, but dealing Bitcoin is more lucrative, and it aligns perfectly with my intense desire to save people from this system, which is destroying them. And just for that reason, I hope the people listening to this are saying, oh yeah, I should buy Bitcoin. Well, yeah, sure you should, but you should tell everybody else, explain the problem. They're saving their wealth in fiat currencies. Lots of people are doing that, and they're going to get hurt, and I don't want that to happen. So I deal Bitcoin, and I hope they can buy some from me.
Yeah, well, and another point is, it's like a language. It needs network effects. The more people that speak the language, the more valuable the language becomes. And with Bitcoin, like with BitPay, when we do a merchant integration, in some cases it's 2 lines of code, and now that company accepts Bitcoin. So the barriers to entry to speaking Bitcoin, even for some of the largest corporations in the world, is very, very small. And we're talking about Apple sitting on $200 billion of cash. If they, if major corporations were sitting on any material amount of Bitcoin on their treasury balance, then the price is going to be huge. And guess what? Some companies are starting to hold Bitcoin on their balance sheet. Why? Because they have to have it in order to pay the ransomware ransom, which is in Bitcoin, when their databases get encrypted. And unfortunately it's happening, with healthcare industry or hospitals and some other, really important and critical infrastructure. But people and companies are having to upgrade their information security. They're having to upgrade and hold Bitcoin on their balance sheet to protect themselves and be nimble. And I just see the network effects of it taking more and more root and growing. And it's very much like a rising sun. It might be gradual, but it's coming. And I don't know that the current system can withstand the transparency that is imposed by Bitcoin's regulation, which is enforced by math and cryptographically provable.
Well, I'm loving this philosophical conversation here, and I'm just absorbing it, sitting here, and just my mind is just going in circles here, and I'm loving it. But as we round a corner here, I want to kind of get back to what we started this conversation off with, and that is the Block Reward Halving, and sort of come to a conclusion here. Max, let's kick this off with you. What is different about what is happening in a matter of days here, and what we saw a few years back with the Block Reward Halving, and what is special about 2016 in Bitcoin?
Well, I think, there's a few theories going on. We know Bitcoin's gone up in price for the last, about 50% over the last few months. And I kind of predicted that back in October last year. I put a video on YouTube predicting this. My suggestion was, because we learned from 2012, 13, people have started to front run the halving, realizing it's a lot more significant than what they originally thought. So I think my suggestion is that that's one of the critical reasons for the price increase already. Not the only one, but one of them. And so I think we're a little bit more aware of it. There's podcasts like this and discussion like this, and to Bitcoin insiders, this is not kind of news for anyone. So there's a little bit more foresight and a little bit more predictability about it. But I still think the majority of the price rise will happen after the halving, and probably even a month or 2 or 3 or 4 afterwards. And so other than that, I think it's a pretty similar event to back in 2012. Now, what else is quite interesting is at 2012, at the occurrence of the block halving, that meant that the number of Bitcoins in existence was half of what will be in existence eventually. At this halving, it means 75% of the Bitcoins that will be in existence are in existence as of the halving. And I think from here on, it starts to get very, very frugal, the supply. And so I think, like the last 2 years, we've had this kind of a stationary price for Bitcoin, kind of running in that channel. I'm not sure you'll see that again, because if demand increases as it has done, the last 4 years, I think the supply is going to be so frugal that you're going to see that consistent price rise of Bitcoin. Obviously not every single day and in any given period, but more consistent than you saw the last 2 years anyway.
Wow. Dave, let's go on to you. Same question, just, what's special about 2016 and Bitcoin and the halving that's happening in a couple days? And, also any closing thoughts, and we'll get closing thoughts for you too as well, Max.
Well, an interesting way to look at the halving, people think the reward is getting cut in half. But if you look at the miner business, they're doing work to protect our transactions, and we give them a reward. That reward is a bunch of Bitcoins, but it has a value. So we're giving them that value. The Bitcoin community is giving the miners, every 10 minutes, we're giving them a reward. And in terms of that, the halving is actually doubling the value of a Bitcoin. All Bitcoins are doubled in value because the supply is now covering twice as much reward as it was before. Okay, this is a subtle and very useful way to look at things. I'll just tell you the story because Carl Watner and I have been working on a chart of monies, and in explaining Bitcoin to him, I told him that the Bitcoins that are being created represented 1/50th of the reward 4 years ago, and now they represent 1/25th of the reward, and in a couple days they're going to represent 2/25ths. And he said, well, that's doubling, and everybody's talking about that it's getting cut in half. Yes, the amount of Bitcoins is getting cut in half. The reward itself is staying the same. It's a reward for doing a whole bunch of hashing over a 10-minute period. So the value of the Bitcoins in the reward is doubling. And if you can really understand that, it's really shifting your internal medium of exchange. And I've tried to do that into ounces of gold and into Bitcoins and into silver, away from the dollar, because when your internal medium of exchange is fiat currency, then you're unmoored. You become that's consumerism. The basis of consumerism is if you have your wealth, you have to spend it, otherwise inflation is going to take it away, which is backwards. If you have wealth, you need to invest it so that it maintains. But with gold and silver and Bitcoin, their purchasing power goes up because the population of the planet goes up, and the average person wants a certain amount of each, and that may change over time, but it has an average. And if you do the math on that, you discover that the value of commodity money goes up over time. The purchasing power goes up over time. And that's exactly how Bitcoin was designed. It doubles every 4 years.
Trace, we're talking about money, is the supply of Bitcoin essentially coming off the market with the halving, and I want to get your kind of closing thoughts on that. And with what Dave said, it reminded me that Keynesians want the currency supplies, and they say it needs to continue to expand to facilitate growth within the economy. And if we get to a point where there's no more growth in Bitcoin, is that going to be a problem for its fundamentals as currency? So however you want to answer that, and just some closing thoughts.
Well, yeah, I mean, first, people need to have some understanding of the Austrian School of Economics. Read Mises, read Rothbard. Second, people in general just do not have any financial education. They don't even know how to balance their credit card statement or checkbook, let alone how to create their own financial statements. And one of the critical things, as Dave was talking about, when you're creating your financial statements, is the use of what's called a numeraire. The numeraire is the unit of account that you perform your mental calculations of value in. Most companies, their numeraire is the US dollar. Me personally, I like to use gold and the US dollar. So I'm actually keeping my financial statements, my balance sheet, my income statement, stuff like that. I'm measuring it in both gold and in dollars. And so when he's talking about the block reward, when you actually use dollars as the numeraire, or even gold as the numeraire, that's actually increasing, even though the number of Bitcoins is decreasing. So that means that our mining capacity, our mining power, when we're looking at it relative to all the other goods in the economy, is increasing, which is good. It means the Bitcoin system is more secure. But to talk about the actual fundamental demand mechanics, because that's one thing we don't usually talk about when we're looking at fiat currencies or money or things of this nature, is the demand side of stuff. With Bitcoin, it's very unique. The supply is fixed and known in advance to all market participants. 21 million coins, we know the distribution schedule, so we're able to know the stock-to-flow ratios in terms of Bitcoins as a numeraire. Not necessarily in terms of dollars, because that's going to fluctuate based on speculative demand and what I like to call transactional demand. I like to pull these two apart. Speculative demand, Bitcoin functions as a Veblen good, just like gold does. As the price goes up, people actually want more of it. It's got a very unusual demand characteristic in that regards. And why is that? Because as Max talked about earlier, and Max and I, we've had a lot of wonderful discussions about Bitcoin over the years. I've known him long before Bitcoin even existed, and so we've massaged a lot of these ideas over a lot of dinners. But everybody loves to chase the rabbit, that speculative demand, and that can change on a dime. People want it speculatively or not. But when we're looking at the transactional demand, which is totally different, and so far all we've had is speculative demand impacting the price with regards to the halvening. But when we look at transactional demand, that's people who are using Bitcoin solely to transfer value over the communications channel. Companies like Abra, nefarious companies like Silk Road. People buy the Bitcoins, they send them to buy their stuff. They only hold Bitcoin for a couple of days at the most, so they're not wanting to be exposed to the price volatility of Bitcoin for very long. They're not speculating on that. Well, guess what? Whether Bitcoin's $5, $10,000, $1 million, it doesn't matter. It provides that utility of transferring value over distance, over a communications channel equally as well. And so how do you figure out the price elasticity of demand for this transactional demand component of Bitcoin? Because remember, when people are using it for that, they actually have to take possession of the Bitcoins. So it's not like gold, which just sits in a vault largely only as a store of value. Like, you actually have to take the Bitcoins and be moving them around to different people's hands. And people in the Bitcoin community are extremely paranoid. If it's not in the blockchain, it didn't happen. If it's not in the blockchain, it's probably still in Mark Karpeles' wallet. Mt. Gox, which failed and lost about $500 million of Bitcoin of customer funds. So people are able to instantly verify the quantity and the quality of those Bitcoins in the blockchain. And they use that for transactional demand. And the price elasticity of demand, when they're using it for that transactional purpose, is pretty much irrelevant. The price doesn't matter to them. And yet, so they'll buy no matter what the price is, right? And prices are set at the margin. So it takes only a very small increase in transactional demand usage coupled with a net speculative demand increase to cause the price to go up in a really big way. And so that's why I think this is going to be exciting. And so we've got logic, we've got theory, and we got data. Anytime we've had large shocks to the transactional supply of Bitcoin, we've always seen a big price increase. The first halvening, it went from $7 to $266. When the Silk Road Bitcoins got seized, $120 million worth of Bitcoins, everybody's like, oh, Silk Road got shut down, the price dropped to $60. Within 2 or 3 months, it was over $1,200 a Bitcoin. Why? Because everybody had to go back into the market and buy $120 million worth of Bitcoin to use for transactional demand purposes. So whenever we've had a shock in the transactional supply, we've always seen it reflected in a very positive way in the price, because the supply is fixed. Otherwise,
Yeah. Wow. That makes a whole lot of sense, and it shows what the fundamentals are versus just the speculation. Because I think a lot of people are concerned that they're going to buy high and get stuck holding the bag with it going down. But go ahead.
Oh,
go ahead.
I forgot another very critical point to this. 3 years ago, the amount of money spent on transaction fees. Now, anybody can just send transactions around, right? But if you want to get into the block space, there's a limit to the number of transactions that can go into a block, and that limit's not being raised. And so as more transactions happen, eventually you fill it all up with free transactions, and then people have to start bidding. Basically, they're like, oh, I'll pay 5 cents to be included. Oh, I'll pay 10 cents to be included. And so you get these transaction fees that get paid. 3 years ago, the 200-day moving average, and I like the 200-day moving average because it filters out all the daily noise. The 200-day moving average of transaction fees in US dollars, so they're paid in Bitcoin, but you take that based on the exchange rate in US dollars, it was about $250 a day being paid. Average 200-day moving average, $250 a day in transaction fees 3 years ago. That's how much people were valuing using the Bitcoin network. I wrote an article in December of last year. We had a Bitcoin investor conference. Max and I both spoke at it in October. December, I wrote an article. The next great Bitcoin bull market is here. One of the metrics I used was that the transaction fees, the 200-day moving average of those transaction fees in December of 2015 were up to $7,000 a day. So $250 to $7,000 over about a 3-year period. Today, the 200-day moving average is over $20,000 a day being paid in transaction fees. And one of the reasons I like that is because that's actual money that people are spending to use Bitcoin. We're not talking about spam emails. We're not talking about inflated page views like the tech bubble. We're talking about cold, hard cash that people are spending to use Bitcoin. It's gone from $250 3 and a half years ago, to about over $20,000 a day in less than 3 years. There is fundamental usage happening with the Bitcoin network, and people are paying money, and everybody can see how much people are paying to use it. And I think that's a huge bullish indicator for the transactional demand of Bitcoin, because that's talking about the velocity of Bitcoin. Bitcoins that are moving hands, and people are paying money to the miners in order for those Bitcoins to be moving hands.
Max, I want to get your closing thoughts here before we said goodbye, and I want to thank everyone for coming on the show and doing this. I mean, this was a really, really great thing, and it was a pleasure for me to do this. So, Max, your closing thoughts here.
I don't have too much to add. I'm really glad that Trace got to get in that part about the transactional aspect of Bitcoin. It's super important to understand for people trying to analyze what's going on and to make price predictions, as every investor has to do. So, yeah, I don't have too much to add, but thank you very much for having us, and I look forward to watching the end of the year with Bitcoin, because I think it's going to be very exciting.
Thanks, everyone, for coming on. And for everyone listening, please, we'll have everyone's contact information, biographies, and ways you can reach out to them in the description area. Please do so. Trace, Max, and Dave, thanks for coming on the show.
Thanks so much for having us.